When you buy a coffee with a $5 bill, you're engaging in a pure, direct exchange. You hand over the cash, they hand over the drink, and the transaction is finished, just between you two. Digital payments change that dynamic. When you swipe a card or tap a phone, you're no longer paying the shop directly. Instead, you're sending a request to your bank, asking them to handle the exchange on your behalf. In this system, the bank is the central scorekeeper. They maintain a prana-driva base where they deduct the cost from your digital balance and add it to the shop's account. Because the bank controls this master list of balances, they have the final say. They can charge fees, take days to move money, or stop the payment entirely. We've operated this way since 1971, when the link between the US dollar and physical gold was cut. This created fiat money, currency that works simply because a government says it's money, effectively backed by a promise rather than a vault of metal. Without a physical anchor like gold, central authorities can increase the total supply of money whenever they decide. This gives governments and central banks ultimate control over the value of the currency in your pocket. Modern banking is undeniably convenient, but it requires a significant trade-off. To use it, you have to trust these central institutions to manage your wealth and give you permission to use it. This raises a challenge. Is it possible to have the speed of an online transfer with the same permissionless freedom as physical cash? Bitcoin provides an alternative. It functions as a global payment network, using its own digital units to move value across the internet without needing a bank to oversee the process. Imagine a massive digital notebook that records every transaction. Instead of being locked in one bank's computer, identical copies of this notebook are shared across tens of thousands of independent computers worldwide. Everyone can see the entries, but no one person owns the book. When you send a payment, your computer broadcasts to the entire network that you want to move funds. You aren't asking a central authority for approval. You're announcing the change to every copy of the notebook at once. Before that entry is accepted, these thousands of computers race to check the math. They're effectively double-checking every previous receipt in the notebook's history to prove you have the funds before they allow the page to update. Because these computers must prove their work to the rest of the network, honesty is built into the system's own logic. You don't need to trust a banker's word when you have thousands of strangers mathematically proving that every transaction is valid. Once the network confirms the math is right, that group of transactions is bundled together and secured with a unique mathematical seal. This new page of records is then linked to the one that came before it, creating a permanent chronological chain. This is the blockchain. Because this chain is locked with these complex seals and stored on thousands of computers, the records are tamper-proof. If a hacker tried to change an old page, the whole network would instantly see that the math no longer adds up, and the change would be rejected. Early internet services often relied on a single main office or central server. This meant the government or a rival could simply target that one location to shut the entire service down. Bitcoin avoids this weakness by living everywhere at once. The software runs on individual computers scattered across the globe, meaning there is no single target to hit. There is no headquarters to close and no CEO to stop. Because the network is spread so thin across so many different countries, it's practically impossible for any one entity to turn it off. This system allows any two people on Earth to exchange value with total confidence, even if they've never met and don't have a middleman to vouch for them. While traditional banking works well enough for many, billions of people worldwide live in places where there are no banks, or where the banks that do exist aren't reliable. In countries facing extreme inflation, a lifetime of savings can become worthless in a few months. For these people, Bitcoin isn't just a tech curiosity, it's a way to protect their local wealth in a system that can't be devalued by a corrupt or struggling government. Since it's purely digital, anyone with a basic smartphone and a signal can access this global infrastructure. It effectively gives a farmer in a remote village the same financial tools as a professional trader in a major city. We've watched money evolve from physical metal coins to paper promises, and then to digits in a bank's database. Now we're seeing it move into open, shared networks. This technology shifts the power away from centralized institutions and puts it back into your hands. It provides a way to participate in the global economy on your own terms, effectively allowing you to be your own bank.